Hey everyone. Okay, I'm just beginning the stream now. Sorry, I'm a little bit behind. I appreciate your patience. Thanks for joining me today. It's Mark P Markets, Mark Principato. I'm a chartered market technician. Thanks for joining me. Okay, so a couple of things real quick. I'm going to cover Bitcoin like I usually do. I'm going to talk about the economic calendar first very quickly, and then I'm going to spend the rest of the time on your questions. So if you have a stock or an altcoin or something that you'd like me to analyze, please share it in the chat now. So once I get to the chat portion of the stream, I can answer your question. If it's an altcoin, please make sure to put USD after it because there are some symbols I'm not familiar with and I'm going to think it's a stock. So I have to emphasize that again. Please make sure to put USD or USDT after the altcoin symbol so I get it right. Also, one symbol per person so that I can get through more questions. I can't go all, usually I do these things for about 90 minutes. I'm going to have to cut it a little short today. Okay, just letting you know up front. All right, so with all that said, let's get this thing started. Now, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. We have a lot to talk about here today. Let me just say hello to all my regulars. We have Travel, good to see you. Eligius, all right. We got Thorium, hey. Mustafa, Bart, good to see you all. Elizabeth, Peter, who else? I see a bunch of people. Mr. Plow, Schwartz, of course, Schwartz is here. My international man of mystery. I wouldn't feel right if he wasn't here. You never know what country he's going to stream from or join us from. Okay, anyway, let's get into the economic calendar first, okay? Now, very quickly, there's really not, this is a holiday week. It's the first thing you need to know. In this country, on Thursday is Thanksgiving. Also, just so you know, I am not going to be streaming on Thursday because it is a U.S. holiday and I will not be streaming. So just make sure you know that in advance, okay? Now, because we're in a holiday week, markets typically act in a little more of an unusual or erratic way a lot of times. I've seen this many years this particular week. The market tends to flow in an optimistic way. There's usually, volume usually gets smaller and smaller as the week continues. Today's probably going to be the day with the most volume, which tells you that there's going to be less and less opportunity, especially if you're a day trader. I know most of you are probably not, so it's not going to be a concern. But as far as opportunities go, this is probably a good week. As far as swing trades and investments, this is probably a good week to take off. Okay, the market's basically on highs. We were pushing all-time highs earlier today on the NASDAQ before it sold off on some stupid news. And you're going to see a lot of that kind of nonsense. So this is not really a good week for swing trade opportunities. I'm going to tell you that right now, especially in the stock market. All right, so let's talk about the economic calendar real quick because I checked this out. It's very important for Forex trades or things that are affected by the dollar, which we will talk about. I see some questions about it. All right, so let's just go over this real quick. So today was New Zealand retail sales. Okay, not a big deal. There's probably not much going on this week. On the 23rd, which is tomorrow, we have German market PMI composite, not a big market mover. We also have Europe market PMI. Again, no one cares. Also on the 23rd, we have for the pound, market services. Okay, who cares? On the 23rd, also New Zealand, Royal Bank of New Zealand rate statement. So they're going to have their monetary policy statement that probably comes out sometime in the evening, U.S. time, Eastern time. So I'm guessing that's coming out like, 10 p.m. Eastern time. You have to check your calendar. That's important if you're going to be in like the Kiwi pair or something like that. Otherwise, it's not a global market mover. It's probably not going to move the dollar, okay? So I wouldn't worry too much about that. And then on the 24th, we have for the U.S., we have GDP annualized, durable goods, and FOMC minutes, okay? Now, that's Wednesday. That usually comes out, the minutes, the FOMC minutes come out usually around 2 p.m. If there are any surprises in there, it can affect the market somewhat. But typically, the minutes are not like a major market mover usually, okay? Even though it is part of the FOMC situation. Also on the 25th, we have Australia retail sales. That's out in the evening. On the 26th, we have Switzerland GDP. Okay, again, there's nothing going on this week as far as economic news. What I look for in terms of economic news is Do we have an FOMC meeting this week? No, I don't see one. Do we have non-farm payrolls this week? No, I don't see that on the schedule. Those are the most important economic events that are scheduled each month that you should be paying attention to. Otherwise, there's really not too many other things. Now, a couple of weeks ago, we had the CPI number, which came out like on a Tuesday or a Wednesday. It's an inflationary number, and usually that number is just a non-event, no one cares, but it had an effect on the market out of nowhere. Out of nowhere, they realize, oh, I think we have inflation. Look what the report says, right? And now inflation is like a word everyone's talking about again. Meanwhile, there's been inflation, okay? But that's what it takes. So my point is, sometimes these little economic reports that usually have no effect out of nowhere become important, right? So that's why it's a good idea to just be aware of them. And if they do create some type of range expansion intraday, you should at least know where your levels are. And then if you're aware of that news, like for me, I don't pay attention. If there's some kind of dramatic move in the market, I'm just focusing on levels anyway. I don't know what the news is, and I don't care what the news is. Now, I'll stay away from like an FOMC meeting or like NFP, because I know exactly what's coming out, and then I just let the market interpret it. But that's really the best way to treat that information, not trying to wrap your head around what the information actually is that's useless to us, okay? Especially as short-term timers, market timers. All right, so that's the news. Let's talk about Bitcoin. And again, I see lots of questions and everything here. Cool, so I'm going to get to all that. Thanks for asking and your participation. All right, so first things first. Let me go to a chart that has my levels on it. For those of you that read my trading view analysis that I put out every week, I talked about, 2 weeks ago, I talked about this blue box, okay, the 57K support area. I talked about it when price was above 63, right? Price was what, 64, 65, whatever it was, and it broke 62K. I talked about that, and I said if 62K breaks, then we're likely to test 57K area. That's this box, area. I emphasize area because a support level is not a specific price. It's more like a zone. And price actually went to 55K, okay, before he had this initial bounce. So the thing is, when we know the area, we should be then looking for particular types of price behavior. So here we are now. The initial bounce, we had a couple of green candles there. Now, I wasn't too excited about the initial bounce, not because of the kind of candles that developed, but because we broke 62K. That 62K level was a weekly sell signal. So for me, it's like, okay, when something like that breaks, bearish momentum is likely to linger or stick around. So I'm not going to be in a hurry to get back into this thing, all right, anytime soon. That's just my, my experience. So since then, right, we had this initial move. This sucks a lot of people in. People have no patience. I understand. Look, it's an aggressive trade, and it's possible that this thing could have put in a tight higher low and then worked its way higher. That was all possible. But this situation that we have right now is also possible and part of the risk that you take when you get into the initial move. So I was not interested in the initial move, and here we are testing 55K again and a lower high established. So what does this mean? Well, we still have a level of interest. We're still at support, okay? We're still at support, so that means this thing can still reverse on the bullish side. But as far as getting in now, it's too early. What do I tell people? Wait for the close of the candle. If this candle closes like this, that's not good, okay? That's not the kind of candle that would prompt a buy signal for me, that's for sure. This thing is sitting on its lows, and we have a lower high established. So right now, at this moment, the way this looks is momentum, or the structure, favors a lower low. If we clear this 57 to 55K area, we're looking at 51K. All right, that's what we're looking. That's the next support level. Let me draw a line there. Okay, that's what, right around 51K is right around there. Okay, that's the next support level. Now, if we get a move like that, it's probably going to have an effect on a lot of these garbage altcoins that follow Bitcoin. Not all of them, but a lot of them. That's why a couple of weeks ago, when everyone kept harassing me about why aren't we buying these things at the highs, I said because we're at resistance levels. And if Bitcoin pulls back, they're going to get hammered. And a lot of them are getting hammered. All right? So that's why I don't buy at resistance. I look to buy at support. We are at a support, but the candles are not aligning yet. So what I want to see over the next few days, and what you need to keep an eye out for, is basically one of two things. Because now we have like a double bottom situation potentially developing. We need to see an inside bar over the next candle. All right, it means you have to wait the whole day. This candle needs to close. The next candle needs to print an inside bar. All right, if we get something like that, and then the following candle takes that high out, you have a buy signal off of a double bottom, off of a pretty important support level. That would all make sense in terms of the reward risk, and that would be a worthwhile or justified risk, meaning you're going to risk about 3,000 or 4,000 points, and you're going to try to make at least 3,000 or 4,000 points, possibly more, if price can at least retest the midpoint here, this resistance area here. That's what you're looking for as a swing trader. Okay. The other scenario to look for is the bullish pin bar after a failed low. So the bullish pin bar, basically, next candle opens, it tests lower, sucks in a lot of shorts. You're going to see a lot of people talking short. Bitcoin's going to zero, all kinds of other nonsense. And then it turns into a bullish pin bar by the time it closes. Once that high is taken out on the following candle, you have a trade signal. Okay, along a buy signal would be there, and it would be a failed low, which is the same as a double bottom. It has the same effect, except you're going to have more shorts caught in it. Okay, so that's a long. You should be looking, you should be at least thinking long here. Now, people who look at small time frames, and people that are all confused by small time frames because they don't know any better, are going to be thinking short here. Now, for your small time frame, that would make sense because the momentum is bearish, but just keep in mind there's a good possibility that the momentum reverses here, and that's the risk you take as a short. That's why it's so important. If you're into shorting something like this, you have to keep it on your small time frame, and you have to measure your risk on your small time frame. And if you get stopped out, you have to take that stop on that small time frame, because if you get caught in a larger magnitude reversal, this thing can run 3, 4, 5, 6,000 points. Okay, you don't want to get caught in that. So we don't short Bitcoin anyway, but I just wanted to put that out there. All right, so that's the Bitcoin situation. Now, I'm going to get to your questions. Again, if you want to see the dollar, I saw a question about the dollar in here, so I'm going to answer that. If you want to see the dollar, you want to see gold, you want to see the stock market, just put that in the chat, and I will be happy to go over those markets. Okay, so I am now going through the chat. Okay, so, Eligius from Lithuania, cool. Maybe some of your rant about SHIB. Okay, real question would be about Amgen. All right, so actually, let me take a look at SHIB real quick. SHIB. USDT, how's that thing been? Okay, not too bad. I mean, considering Bitcoin is about to break its support, I would think SHIB, which has been acting relatively weak, would just be getting hammered. But really, what this chart is saying is that it's out of play. Now, SHIB is a meme coin. It's just a junk garbage coin that only moves on advertising or marketing, or, you know, when they pay a fake guru to push the coin, that's when this thing goes, right? So if that's the case, I mean, right now it's out of play. It's a higher low. So if you want to get involved in something like this and play the SHIB game, maybe you wait until this little lower high situation gets taken out. Of course, it would be nice if you were in on before the beginning of the next hype wave. You know, when they get one of these big YouTubers with large following to, I'm long SHIB, it's going to be up 20,000% in one day. Right? When you get one of those guys, then you get the move on. So if you're into that game, I would keep an eye on it, because at least you're at an attractive level. You're not buying the high. You're buying a potential support area. Just wait for a better candle. That's SHIB. Let's take a look at Amgen stock. Okay, Amgen. Let's see what's going on here with Amgen. So now this is a biotech, and this is going to be, typically these are less sensitive to the S&P. These usually move on their own news. Okay, so let's just look back here a bit. Hold on, what's going on here on the bigger picture? So this is the weekly chart. You are near, you broke a support level on the weekly. You're fooling around here, okay, at this old resistance. Okay, so it's an attractive level, definitely a level of interest, okay, for longs. Now, let's take a look. Let's go back to the smaller time frame. In that area, you have a double bottom potentially developing, and you have a cooperative candle. You have a potential bullish pin bar. The market's still open, so this may close like this, okay? If this candle closes like this, you do have a bullish pin bar, and then tomorrow, if the high of that pin bar is taken out, you have a long signal. It's a long signal on top of being basically a double bottom or a higher low relative to this low here. What, 200, the 200 level? So it looks like that 200 level is going to be a key level in this situation. So what to do? Well, this is a pretty good situation as far as a swing trade and taking risk. And the reason is, even though you have the lower high and all that other stuff, and the recent structure is bearish, there are lower highs and lower lows, you have an initial push, just like that Bitcoin move, right? You have this initial structure in place. That's good. That's a starting point, right? That means this can turn into a double bottom or a higher low, and there's more of a chance that buying activity steps in, and there's some evidence of that now. So I would say this is worth taking the risk. The low here is basically 200. The current price is 203, almost 204. You're probably going to have to risk about 5 points, okay? 5 or 6 points once this thing breaks that high. But you got plenty of potential here. I mean, 218 is this high over here. So if you're buying this thing, what's the high of this candle? 206. So you're looking at like what, 12 points potential with about 5 or 6 points of risk. That's 2 to 1 or slightly more, right? So it's definitely a worthwhile trade. And if it breaks that resistance, which is always possible, then you have a better trade on your hands at that point, a better reward risk. But you don't want to be unrealistic. And I think that this peak over here is a good reference point for beginning to take profit, and the reward risk is attractive. So that's what I have to say about this. Again, keep in mind, these things, just because we have the formation and all that other stuff, doesn't guarantee it's going to work. It's just you have attractive reward risk, and you have a lot of things lined up here. If you take this trade, it may take a couple of weeks or something like that to work its way to such a level. All right, especially if there's some news that comes out that pushes this thing along. So that's what I have to say about that. Thanks for asking. All right, it's going to support and forming a pin bar. Right, so that's my perspective as far as the swing trade. So you're basically risking about 5 points to make about 12, or maybe 10. Okay, does it have potential to go from 2? Yes, very much. Okay, no problem. So I pretty much answered all those questions. Okay, will there be a continuation of talking markets? As of right now, no. We don't have compatible schedules, so I'm not, there's no continuation of that show. So thank you for asking. Elizabeth, okay, should I be looking for a double bottom in Ethereum? Yeah, so let's take a look at Ethereum. Now, Ethereum, let's go to my Ethereum chart. Now, so Ethereum, is this the right chart? Yeah. Is obviously follows, right? It's a Bitcoin follower. And we talked about that 38 area. We talked about that support. I remember talking about that in the previous stream. And it's testing the area, right? You have the initial move off the area. It wasn't exactly off the level, as you can see. It broke through it, came back above, and now it's retesting again. It's trying to produce that double bottom situation, kind of similar to Bitcoin. So yeah, in this area, Elizabeth, it would be the same idea. You're looking for that double bottom to confirm. And if it can, meaning the next candle is an inside bar, bullish inside bar, or bullish pin bar, that would be your, that would justify the risk. Of course, you'd have to look at the low of that candle, which is, we don't have that candle here right now. Here, let me just draw an example, right? If you have like the failed low or something like that, let's just say that turns into a bullish pin bar. The low of this candle is where you would measure risk from, right? So I don't know what the typical risk is on Ethereum because I'm more in tune with Bitcoin. The typical risk on Bitcoin is about 3,000 or 4,000 points. So I'm guessing with something like Ethereum, it's probably going to be like, let's see, what's the range of this candle here? About 300 or 400 points, right? Something like that, maybe a little less. So just that's what you want to be looking for on something like this. It's very important to wait for that, because if this candle closes weak, which is also a possibility, and it breaks this support, if it in that candle that breaks, it closes weak and never gives you the pin bar, then what that will do is it will confirm a lower high. And that's not characteristic of a bullish structure, right? A lower high going to a lower low. So at that point, I would step aside, right, and wait for something more bullish to develop. And it may take a couple of weeks, right? Also, get your lead from Bitcoin, because if Bitcoin is breaking, I would imagine this is breaking too. So if Bitcoin works this way to 51K, I would imagine this is going to do something similar. Stay out of this thing's way if it does something like that, and wait for stability. Stability can come in the form of another double bottom. Now, a double bottom requires an initial move like this, right? It has to pop up first before it can test again. It's very hard to wait through that initial push. You have to have a lot of patience. Taking the initial move, it's an aggressive trade because you're still going against potential bearish momentum. And people that don't know any better can get caught in a situation like this. They all bought the initial move. They all thought they bought the pullback and that this thing is going to go to new highs and they're going to be millionaires by tomorrow and all that other stuff like all the fake gurus promise. And then you got this, right? And if it breaks, now they're all going to get caught. And at some point, they're gonna hope, right? Because a lot of them aren't going to use stops, because why use stops? And they're going to go into hope mode until they all start getting margined out, and that's when you really start to get more dramatic selling in a situation like that. You don't want to be caught in that situation, so that's why it's better to wait. All right, so I hope that answers your question. Basically, it's the same story as Bitcoin. Okay, hey Thorium. Oh, from British Columbia. Okay. Can you take a look at XSN? Sure, let's take a look. XSN USD. What's the story here? So a lot of these altcoins, what concerned me about a lot of these is when Bitcoin and Ethereum were pushing their highs, as many of you know because I've talked about this like every week, many of these garbage coins, this is a garbage coin, definitely, were fooling around at resistance levels, okay? This is a resistance level. And not only that, but it established basically this double top situation, and it's lower than this high. Meanwhile, Bitcoin and Ethereum are coming off all-time highs. This thing never even came close. So as far as entry points, I would find another coin. I wouldn't bother with this thing, right? Because this is not a good-looking chart. There are much better-looking charts out there than this. I mean, Ethereum is better looking. Anything is better looking. So this is just total relative weakness, which means if Bitcoin continues breaking supports, this thing's likely to get hammered. Now, a lot of these are out of play, like as we looked with SHIB. SHIB is acting relatively weak, and with Bitcoin pulling back, SHIB is not pulling back as hard as I would expect. So it's probably just a sign of being out of play. So with something like this, as far as levels, you know, if you want to get involved in something like this, now would certainly not be the time, not with a candle that looks like this. If anything, wait for this 19.5 or 20 cent support, that at least it's a support level, better than buying resistance levels. And if that breaks, you're looking at this low over here, okay, which is what, 13 cents? Those are your levels of interest on something like this. But even then, like I said, your overall structure is not very supportive here. This thing has just been nothing but lower highs, tried to form a higher low, and could not break these resistance levels. So when money starts coming out of this entire space, which it looks like it may come about, these garbage coins are going to be the first to go into zero. I mean, you know, I'm exaggerating, but they're going to be the first ones that everyone's going to get out of. So just something to keep in mind, right? Look for a better chart. So with that being said, I wouldn't be like investing in something like this with these coins. Remember, they're all highly speculative, but these are like the worst of the worst when they look, because I don't care what their story is. I don't care how great they are and what kind of problems they're solving and all this other nonsense. Okay, I heard the same story 20 years ago with the dot-coms. They were going to save this and solve that and blah, blah, blah. And there's only a handful of them today. So these things are going to go through the same process. All right, and you just don't know which ones are going to actually, you know, get through this and actually provide real value or not. So I hope that helps. Okay, Mustafa, do you think BTC confirmed a double bottom? Yeah, definitely not. We have continuation. So I explained all that, so I hope that answers your question. Just go back to the beginning. I know you've asked that a while ago, so hopefully that answers your question, what I said earlier about Bitcoin. Hey, Bart, ¿cómo estás? Would it be advisable to place an order for Bitcoin for a buy limit at 53K? Chances of a bounce in that area look huge. Isn't risk smaller? Okay, so Bart poses a good question. Let's go back to that Bitcoin chart. Now, so he's talking about placing the order at 53K. Here, let's put a line there. 53K is right there, right? It's 53K. He's saying place an order in advance. And he's saying, isn't the risk smaller than waiting for a buy signal at a higher price? Well, here's the thing, Bart. I agree, there's a good chance that if price can actually touch 53K, you're probably going to get buying activity. That is definitely, I think it's likely. But the thing is, there's no way to know. So you're taking a lot of risk. If you want to place orders in advance and you're trying to swing trade, it's an extremely risky thing to do, because the thing is, if there's some sort of unexpected news, China declares Bitcoin illegal. I'm exaggerating, but something ridiculous like that. Elon Musk says he's going to sell all of his Bitcoin, right? Whatever. This thing will pull back 10,000 points, and then you'll see like a huge pin bar, and it'll stop you out, and blah blah blah, and then it's back to 53K anyway, right? That's why it's not worth playing that game. Now, that's for swing trades. If you are looking to build inventory, it's a different game. Many of you, if you're not a patient person, not you, Bart, in particular, but in general, if you're not a patient person, swing trades are probably not a good idea for you, okay? Because they require a lot of waiting around, a lot of missing moves, and waiting for things to line up, whereas position trades or inventory, they don't really require any waiting. You can take any price. It's just a matter of adjusting your size to where you are on the roadmap. Right, so in your case, for your question, Bart, 53K, that would be a great place for a limit order for inventory. So if you normally buy, you're building inventory on Bitcoin because that's part of your long-term plan, and you normally once a month or twice a month you've been buying $100 worth or $500 worth or something like that. In such an area, perhaps you put a limit order for maybe twice of normally what you buy, right? So if you normally buy 100, perhaps you put a limit order there for $200. And if it gets filled, great, you get a great price. And if it doesn't bounce, it doesn't matter. You're looking to buy some anyway, right? If it goes to 40K, that's okay, because you're averaging in at lower prices anyway. But you have to make sure that you stick to your plan and take your small bites and skew the size based on how low this thing goes. So if it does something really dramatic, like goes to 40K very quickly, maybe instead of $200, maybe this time you're going to buy $300 worth or $400 worth, because it's such a dramatic move in such a short time, and you're getting you're getting low prices, okay? But you don't want to overdo it, because what if it goes to 30K? Anything is possible. You have to think risk first. Everyone thinks reward first. You must think risk first. What if it goes to 25K? It's possible. It's unlikely, but it's possible, and you don't want to get caught too big too fast, which is a very common mistake for people that try to build inventory, okay? They get too big too fast. That's why it's good to set like a date and say, okay, the first of the month, I'm going to make my purchase, and only on the first of the month. And I'm going to do that until I allocate all of my funds that I had planned to invest in here on Bitcoin. So I have $10,000 to invest, and each month I'm going to invest $1,000. That's 10 months worth of, first of the month, over the next 10 months, you're going to be averaging into this thing. But if prices are at ridiculous new highs, you skew smaller. If prices are pushing supports, breaking supports, pushing lows, you skew slightly larger until you're fully allocated. Okay, so I hope that answers your question. That's why it's so important to understand the difference between a swing trade and a position trade. A lot of people that are just getting into this have no idea. They just think, having a position is just having a position. A trade is a trade. It's not. Each trade, the time horizon of each trade has a different risk magnitude associated with it. You need to address that, because that's the most important part of the trade, is the risk, not the reward. All right, and I'm not yelling at you there, Bart. I'm just saying, people in general, they have this thing, reward. No, it should be risk. I need to protect my capital. I need to protect it, because as retail traders, we are the lowest on the food chain, okay? Our job as retail traders, or our purpose, is to provide profits for the smart money. That is our role, whether you realize it or not. There are no advantages to being a retail trader. That's why they're so happy to give you, oh, look at these oscillators. Oh, look at my trading platform. We have 10,000 oscillators to choose from. You're guaranteed to find one that works. No. Okay, look at Binance. Oh, we're going to fill you up with all kinds of news and all kinds of stuff. We're going to show you the order book, and it's going to look like a slot machine, and you're going to be excited, right? So that you trade more. So again, we're food for the large institutional blah, 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 okay? So you need to keep that in mind and think defensively, not I need to make money. All right, anyway, that's that rant. And don't get me started on that. I'll talk about that all day. I'll bore you. You'll fall asleep in 2 seconds. All right, let me see what else we got here. So, Mustafa, can you check the dollar? Oh, wait, no, hold on. I skipped a few. Hold on. Going back. Hold on a second. Okay, Bart, also interested in U.S. oil. Yeah, I've been watching oil. All right, so look, I'm going to do oil next. I see you have 2 questions there, but I'm going to answer one because I want to make sure I get to everyone's questions because I have more limited time today. USD WTI. So let me go over oil. I've been watching this because oil has pulled back to an interesting level. Okay, let's take a look at this for those that trade CFDs. Oil looks somewhat bearish, right? But look where oil has pulled back to. That's a support level. And it's even more clear on a weekly chart. This is a place for longs, okay, on oil. Now, so with that being said, look at the current candle. We have a bullish, this is not a pin bar. It's not an inside bar. It's just a bullish candle, right, coming off that low. But okay, it's a daily candle. It's not closed yet, but it's a start. So we had a bullish candle earlier too, and it sold off. This could be, though, the beginning of the next leg higher. It's certainly at a level where such a formation is likely to develop, right? So you're going to have a lot of people shorting this, thinking, oh, yeah, oil's a short, blah, 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 blah. Dollar is going higher. Okay, true. Those all things are true. But oil tends to do its own thing, right? Because oil is very politically driven and all kinds of other variables moving oil. So I wouldn't worry too much about the dollar when it comes to oil. Other markets, yeah, I would stay out of their way because we're going to take a look at that dollar here in a moment because I see someone asked about it. But oil, the level is definitely one of interest. So 2 things you could do with this. You want to go for the initial move, like I described the Bitcoin before. It's very aggressive, right? You could wait till this candle gets closed, take the break of the next high and see where that leg goes. Or if you want to be more conservative with it, wait for the double bottom to develop here. Okay, that could take a week or something like that. It may not develop at all, right? Maybe you get some sort of high or low up in this area here. You have to watch that. But if you do get the double bottom, that would be a more conservative trade, an attractive one, an attractive swing trade for oil. So I definitely like oil as a potential long in this situation, all right? This is what I like, pull back and then wait for that double bottom. I don't like buying oil up here, as you can see why, right? All these breakouts, buy the breakout, right? Buy the breakout and you get caught in this, okay? I don't like getting caught in that. I'd rather buy here. I'd rather wait until all those breakout traders who buy the breakout, right? And they just follow the herd and now they're all banging out here. This is where I'm looking to buy it, all right? That's an attractive area. I mean, Bitcoin's in a similar situation. Bitcoin is even more advanced because Bitcoin has the potential double bottom formation. Oil doesn't even have that yet. Okay, so thanks for mentioning oil. So you talked about U.S. oil, the stock, but what I just showed you here is the CFD. It's going to be the same story, right? Here's U.S. oil, the stock. It's the same story. Looks exactly the same. Okay, so just translate the numbers there. The price might be maybe not the same. Okay, so you want to ask Band. I'll get back to Band. Let me just get through more questions here. Or ask it again on the bottom of the chat so I don't forget, okay? Okay, Peter. Hey, Peter from Slovakia. Would you mind checking your favorite coin, Cardano? Sure, Cardano. Cardano 50x. Wow, what's going on here? How come it's not 50xing? All those fake gurus told me to buy Cardano. I'm going to be a millionaire. I'm going to be a billionaire. I guess not. What's going on? Well, it's the market. It's not my fault. It's the market. Okay, so Cardano. Enough of my Batman. I'm just getting worse and worse with those impressions. So look, I talked about the support area around 190 on Cardano, which was, look, it's still generally there. Okay, it's still there, but this has been acting relatively weak. I'm surprised Cardano hasn't broken that support. You have to understand something. All of this time that it has spent in this area means there are a lot of longs, especially all the people that bought into this little breakout attempt here. Because keep in mind, Cardano is one of those coins that's heavily hyped on YouTube. I wouldn't be surprised if they're paying these gurus some money to hype these things, and you have a lot of retail traders caught in this thing, okay? So if this support breaks, you're probably going to see this thing get hammered. And the next support is around what is that? $1.46, $1.50 area, right? This area right here. That's the next support. So this is still, at this moment, this is still an attractive area. And just like Bitcoin, it has the initial leg in place. So you're looking for the double bottom. If you can get the double bottom here, and the next candle prints green, okay, you get a green candle like right there, you want to go for the swing trade, the structure is, it's all worthwhile because it's basically a range low, broad higher low formation in something that's generally bullish. Okay, so all of that makes sense. If you want to take that risk, it's worthwhile. Obviously, it looks similar to Bitcoin and Ethereum, right? So if Bitcoin and Ethereum bounce, perhaps you can get something here. If you're risking, 50 cents or something like that, hopefully, from that low to the midpoint, what's the low to the midpoint here? What is this? 216. So if you're buying this thing, let's say you're buying it at 180. So let's say you're buying it at 185 and you're risking maybe 30, 40 cents, something like that. You can make that, right? The reward risk, what I'm saying is the reward risk is worthwhile if price can get back into this area here and basically not even break out. It's still in the range. All right, so that's what you'd be looking for as far as a swing trade. I suspect that these things are out of their season, okay? Again, the market hasn't proven that yet, but I suspect, and the reason why I suspect that, I'm going to show you real quick, right? Just going back to Bitcoin. The reason why I suspect that is because of this chart right here, right? The weekly chart. The weekly chart has a lot of bearish signs in it. Okay, you have this situation right here where it made that all-time high, but that all-time high is a failed high relative to the original 64K high. No one's paying attention to that. Okay, that's basically a double top on the weekly chart, which carries a lot of weight. There's a sell signal present on the weekly chart. On top of all of that, this structure that we've had, this bullish structure, everyone thinks we're going to 100,000. Do you know how many YouTube videos I saw with titles, Bitcoin's going to 100,000, it's going to happen this time, and blah, blah, blah. When you see those, you should run, seriously. So all these people are caught in this thing. Meanwhile, this is a three-leg structure, okay? This is a three-leg structure. It's not a five-leg structure. Maybe it turns into one. Maybe this leg right now is a wave 4, possibly, but at the moment, we can't tell that, right? If this overlaps, this little thing back here, this little bump back here, then this thing's in a broad consolidation. This is not an impulse wave at that point, okay? That would be what, the 51K area or slightly lower? What is that price area here? 45, what is that? Let's see. 50, yeah, so 51. So if this thing basically pushes 50K, then we're overlapping. And what that overlapping means in terms of Elliott Wave is that we're not in an impulse wave, we're in a consolidation. And if that's the case, then it opens up the possibility that we can revisit the range low of the consolidation, which is 30K. That's why, all these fake gurus with their big mouths, and they're misleading people. I can understand if you're selling shoes or if you're selling perfume or you're selling some kind of product that people can buy and use and they spend their money and they know what they're spending their money on, okay? But when you push people into something like this, not only are they putting their money at risk, but they can lose more than they initially expected. That's why, these gurus, they don't care. They're just looking for clicks and they're looking for ad revenue from YouTube and whatever. But be cognizant of that, right? My goal for these streams is to help you be able to decide these things for yourself so that you don't have to be misled by these phonies. And there's so many of them. It's unbelievable. Anyway, okay. So let me move on here before I get into that rant. All right, Bart, instead of buying Bitcoin, does it make sense to split the position with a coin that moves more, like Luna? All right, so let's jump over to Luna real quick. And here's the thing. So something like Luna, that's really going to depend on what your goals are, right? So Luna, that's not a bad looking chart, right? Higher lows, higher highs generally. You have a lower high that's established here, similar to the Bitcoin situation. Keep in mind, if Bitcoin breaks, all of these things are probably going to break. So this nice bullish structure that we see will break. But to answer your question, as far as instead of buying just Bitcoin, you have to view these lesser coins, these third or fourth tier coins, something like Luna. I mean, you know, I'm just going to call this a junk coin. You have to consider them more speculative. So the way to deal with something like that is these might be more appropriate for swing trades or more short-term oriented trades, because you don't want to have a lot of time exposure to these because they're junk. And at some point they're probably going to, you know, when they're out of season, they're probably going to be depressed and out of play. Whereas something like Bitcoin is the leader of the entire space, and Bitcoin is probably makes more sense for a long-term. You know, if you want long-term exposure to this space, Bitcoin, Ethereum, something like that, first tier coin, because Bitcoin will probably be around, right? And if the whole sector gets hammered, a lot of these junk coins are going to go back to junk. You know, Bitcoin will probably be at a much lower price, but it'll still exist. Okay, so that's why if you want longer term exposure, Bitcoin would make more sense. If you're thinking more short term, I think these coins would make more sense. That's how I would split that up. I mean, you can trade Bitcoin long term and short term, but these coins, you know, it's just you should categorize them by their you know, how are they viewed? Is this like basically like a penny stock? Is this a junk coin? If it is, you should probably be thinking short term. And if you want to work with that, work with it individually, you know, on an individual swing trade basis. It's not like you have to have both Bitcoin and this thing just because this thing moves faster, okay? Treat it separately. That would be my answer. All right, so thanks for asking. Let me see what else we got here. Okay, dollar. Mustafa wants to see the dollar. No one asks about the dollar. Look at the dollar. This is the new altcoin. This is the new SHIB. I think Chairman Powell is starting his own chat room, and I think I say this joke every week. Buy the dollar, right? He's pushing the dollar. He's hyping the dollar. No, okay. So the dollar is. These are not all-time highs, but these are new highs, right? This makes me excited. You know why I'm excited? Look at this thing. Look at this thing. Okay. Now I've been talking about the dollar since August and July, but no one wants to hear about the dollar, Mustafa. No one wants to hear about the dollar. You know why? Because the dollar is boring. But today I see another comment in here about FOMC. I've been warning about the dollar over and over, but no one wants to hear about it because everyone wants to make money, right? Who cares about the dollar? Well, who trades the dollar? Little retail traders don't trade the dollar, okay? You know who trades the dollar? Banks and institutions, right? And you know, bankers are very boring. No one wants to hear from bankers. So here's the thing, that's bullish. There's nothing bearish about this. This is a weekly chart. That's bullish. Higher lows, dramatic higher high. Even if this thing pulls back a little bit, this structure is bullish, right? I've been talking about this for a long time. The reason why that's important is because this is a warning. This is an economic warning. Okay, why isn't this thing letting me type in? What's going on here? Is this thing working? Let me see. Hold on. Hold on. My keyboard's giving me a hard time here. Hold on 1 second. Let me see if this works. Okay. Hello. All right. Hold on. There we go. Technology. I mean, nothing but problems with this stuff. Okay. So now what? Okay. Hold on. What's going on now? Hold on. Do I have to switch keyboards? No. Okay. All right. So here's a dollar on the daily chart. Can I get the daily chart back here? All right. There we go. All right. So I got all excited. My keyboard got messed up here. All right. So the point is with the dollar is this. It's making higher highs, right? That's a sign of rising rates to come. I've been talking about that. Also, take a look at the bond market real quick. ZN1, okay? Bond market. Look at the bond market today. 10-year note. I stopped talking about these markets because no one wanted to hear about them, right? Because they're boring. But I've been warning and warning and warning. If these bonds keep going lower, and look, they're testing their support again. Look at this candle today on the bonds. That's a reflection of the dollar. So we break that low, rates are rising. Now, what a coincidence. Okay, now Peter asks, I know your opinion on news. This is the next chat thing here. But I read that 14th, 15th December, the Fed is going to have some meeting, and they're going to change an increase in interest. Big change for the market. Okay, Peter, what a coincidence. Okay, now you talk about that meeting that you're talking about is the FOMC meeting. Okay, now the dollar has been pricing in a rate hike for months. I mean, going all the way back to, what is this, June? Is this June over here? That was the low. Since then, nothing but higher lows and higher highs. The smart money knows in advance what's going on in the world. It just goes to show, as retail traders, if that news that you're talking about, Peter, came out today is, we're almost in Thanksgiving here, but the dollar has been rallying since June. Where were these people back in June? Where were these people back in August? Where were they in October when the dollar was clearly in a bullish trend? They come out today and they tell you. That just goes to show the quality of the information that you are consuming. That's why I don't pay attention to news. The dollar told me that news months ago. The dollar was rising, right? That can only mean rising rates. The dollar is pricing it in because smart money trades the dollar. Smart money trades bonds. So when the rate hike actually happens, right? The Fed they may announce it in December, right? Whatever. They may say, okay, we're going to raise rates, right? Okay, great. The market's priced it in. So you're not going to probably see a dramatic move in the market at that point. What you're going to see, because it's being priced in, right? That's what this is. The market knows way in advance. So what you're going to see, let's go to the S&P here real quick. SPX What you're going to see, I mean, look at the S&P. Is this the S&P right now? We're at 4682. Is that right? Hold on. Let me go to a 1H here real quick. Oh, that S&P sold off. Okay, let's go to NSX Let's take a look at some. Oh man, look at this. Okay, we made it to 599 and it sold off. All right, that's interesting. All right, so all right, let me just go back. The reason why I bring these charts up, let's take a look at the, let's go back to the S&P here real quick. Hold on. Man, this thing is really giving me a hard time today. All right, so the way that dollar is going to eat into this, the way it's going to affect things is the following. Right now, companies have been reporting stellar revenues and blah, 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 and they're making billions and trillions of dollars, right? Well, once rates rise, and they've been rising because the bonds are lower, so as bond prices go lower, interest rates are rising. But when the Fed actually pushes it further, which is what their FOMC thing is all about, in Q1 and Q2 of next year, when they start reporting, you're going to hear things like, "Well, we missed our number," or "We're going to guide lower," right? They're going to lower their guidance. That's going to be the result of rising rates. We don't see that yet, but Q1 and Q2, watch out for it. When we see that, Mustafa, when they start reporting those numbers and those numbers are missing because of the rising rates, then you're going to see the stock market have problems. And the stock market may be pricing that in advance. Okay, obviously this could be the very, very, very beginning of it. I don't know. This is an outside bar today, so this can lead to a much broader move lower over the following week, which I'm surprised that we sold off. Because, we're supposed to be in holiday optimistic mode. Usually you don't see harsh sell-offs. But anyway, hey, anything's possible. So that's my point with that. That's my point with the dollar. And what you really need to be paying the close attention to. So you're not going to see this dollar, you're not going to see this effect. It's not a one-to-one thing. I have to emphasize that. It's going to take time. And this dollar has been rising the whole time, as the S&P and NASDAQ has been making higher highs, and everyone's been throwing a party, and blah, 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 blah. Meanwhile, the dollar is quietly rising. So as long as that bullish trend maintains itself in the dollar, I would not be investing in stocks right now. You have, the stocks to buy in 2022, nonsense, blah, blah, blah. We're at market highs, all-time highs, basically. We were making all-time highs earlier today. This is not a time to invest. These are not lows, especially in the face of a rising rate environment. That is why I mention the bonds and the dollar every day, like in the chat room and stuff. And no one cares. No one wants to hear it. But that's why. All right, so thanks for asking, and that's my rant with the dollar and that. So I hope that makes sense to you. Use the dollar and use the bonds as your overall, basically an idea of what's to come in terms of like economic stuff. Because a rising dollar is not a good thing for large companies that have to borrow money, right? A lower dollar is. So, okay, let's move on here. I talk about the dollar all day. All right, Mr. Plow, take an IOTA. Let's take a look. IOTA USD, all right? IOTA. So this thing is sort of going against what's happening at the moment, right, with Bitcoin. Now, this thing, let's go to the weekly, because this one's been basically range bound. Look at this, right? Look at this consolidation. Look at this, right? See this? So this is a tough spot. You don't have really much to say here. It's trying to break out. It's giving you a tail, right? The candle is producing a tail in an area where other people have sold before. So at this moment, that's a false breakout, okay? That's a failed breakout at the moment. But if the candle closes strong, you may have a breakout here. Maybe there was some news on this thing. Obviously, they like to hype these things. The general structure on this thing, you have the higher low. It's trying to go for the higher high, right? And the broader structure is generally bullish. The thing is, Bitcoin is not doing well at the moment. So if Bitcoin breaks, then this is just going to fake everyone out. I would be concerned about that. I certainly wouldn't be buying the breakout, right? With Bitcoin looking the way it's looking. Now, if Bitcoin reverses and gives you the buy signal, then this one might be a good one to go for as far as the swing trade goes to see if that breakout follows through. You could measure your risk from this range low over here, which is what? 127 basically, right? Or you can even round that to maybe 128. That's where your risk will be defined. So that means if this thing fails up in here and turns around, right, it really should not break this area. If it breaks that, you don't want to be involved with this because it shouldn't be breaking that range low. And I would suspect that a lot of these coins are going to break those supports because a lot of them have those supports in place at the moment. If Bitcoin does something dramatic and breaks 51K and you see Bitcoin at like 48K, a lot of these junk coins are probably going to break those supports, okay? That's what you have to watch out for. So if you want to go for something like this, I have to say at the moment it is acting relatively strong because Bitcoin, we see how red that Bitcoin candle was, and this thing is trying to break out. So that is meaningful. Like I said, there's probably some news behind it, but I would wait for Bitcoin to show us, tell a better story before getting involved in something like this. If you want to be more aggressive and say, okay, forget Bitcoin, I just wanted to get involved in this thing, well, you can go for this breakout and define your risk from that range low and then hope for the best, okay? Because you do have this little resistance here. It's just not the top of the range. It's not all the way up in here. Does that make sense? So you do have that higher low. You're looking for the higher high. Make sure you can justify your risk. That's all I can say about that. This chart in particular, I don't like the chart. Like I wouldn't do anything with that personally, right? That to me is just like a range high, and I'm wrong a lot of times. These things can break out, but it's usually rooted in some kind of particular news when they do something like that. All right, so I hope that helps. Okay, hey Travel. All right, Schwartz. All right, I said hi, hello earlier. International man of mystery. Hey Dave. From Dorset, England. Oh yeah, I forgot to mention. I'm glad people are mentioning where they're from. I'm streaming from northern New Jersey. It's always a fun fact if you want to share what country or what city or wherever you're from in the chat. It's just fun to see. I always forget to mention that. People still mention it anyway. All right, Dorset, England. Welcome. Okay, Kim. I have a stop loss at 39.50 on Ethereum. It's okay. The worst scenario is a double bottom, which touched this. Okay, no, here's the thing, Kim. So back to Ethereum. Let's go back there. Ethereum. So if the double bottom holds, you don't want to get stopped out exactly at that double bottom, because if it holds, you're getting stopped out at the bottom, right? Where it could reverse. Keep in mind, the double bottom can give you a failed formation, meaning it goes lower, right? And that's where it would tap your stop, and then it reverses. You don't want to get mixed up in that, right? You want to give it a chance to do that. So that's why you need to put the stop lower. And it's riskier, right? So you said that you ever stop at 39.50. What's this thing right now? 40.73. 39.50. What is this low here? 39.75. In my opinion, that's too tight, right? Because you're going to get stopped out like right there. And this thing needs some room, because if you have a failed low can go this low. A failed low can go as low as like 39, okay? And your stop is at 39.50. So you need to give it some more. I'm not going to say you need to, but it would probably be a good idea if you gave it some more room. Now, if you say, hey, that's too much risk for me, then what you should do is lower your position size. Maybe if you're in some of it right now and you're taking a loss, reduce, get out of some of it, take the loss, and then widen your stop. So if you do get stopped out, if it goes to 39 or 38.75 or 38.50, your loss won't be as large. But that's the way to play that, because again, if you get stopped out right here, that's a really frustrating place to get stopped out, because there's a high probability that this thing reverses from there, right? Now again, there's no way to know that if it will reverse or not, but you want to give it the chance. That's why I tell people, wait, okay? Don't take these trades, wait. And if you get the reversal, now you don't have to be in the position you're in. Now you're getting in while it's reversing and the structure's on your side, instead of have to sit through this, which can be very frustrating or very, very stressful. All right, so hope that answers your question. Hey, go forth and multiply. Bald, pale, and handsome. Great. I hope you're a woman. Go forth and multiply. Okay, Andre, how are you? Okay, cool. Andre, good to see you. I was wondering, what do you think of Cardano? Okay, I answered that one. Bear market signs for Cardano? No, all right, I answered that. It seems like it's been underperforming. And yes, and it has, but it has been underperforming, but we looked at the chart. It's still in play. That support is still holding. When that support breaks, like 185 or whatever that support, when that's cleared, then I would say time to stay away from it. But it still has a chance as long as that support holds. Sometimes these things go out of play and they form that range. The only concern I have about that thing is there are probably lots and lots of longs worried about it, right? And if Bitcoin breaks, you're going to see a flood of selling in Cardano. That's the problem with that, because there's way too many fake gurus pushing that coin. So that is a concern. I can't prove any of that, but that's a concern that I have with that coin. But all that aside, the level is still intact. Okay, that's the level is the fact. All right, so hope that answers the question. Hey Scott, good to see you. James, can you look at Mara? Okay, is that a coin? I'm going to guess that's a coin. That's why I always ask to put USD after it so that I know. Okay, I guess not. Mara must be a stock. Okay, Marathon. Okay, let me know if this is correct. All right, so because I mean there's no Mara coin. I don't see anything. I put USD after it. Let's see, USD. I don't see anything like that. Okay, just double checking. So here's Mara, the stock, Marathon. Okay, so let's take a look at what's going on here. First thing I want to see is the weekly chart. What's going on? Look, that's not a bad weekly structure generally, right? You have this basically higher low, higher high. Okay, obviously this thing has been pretty dramatic, right? Look at those swift moves. All right, now it's been pulling back. Okay, that's pretty dramatic, those pullbacks. You're in a support level, all right? This old resistance, new support. So you have that, okay? Now, the thing is, you have a lot of bearish momentum behind you here. And this candle, the current candle, is not favorable. Look, you had a bullish pin bar the other day, which would have been an aggressive entry, and it's given it back, right? Those are not good signs. So I would step away from this thing right now. I wouldn't do anything with this as far as a swing trade goes, but you do have a level of interest. So watch these prices over the next few days and see if you can get another bullish pin bar to develop in this area here. If you can, then you'll have like a double bottom formation or a failed low. That would be worth the swing trade, giving it a try, if it can prove that it doesn't want to go much lower, right? But if this candle, obviously it's closed, right? This candle closed and we take out the low tomorrow, there is probably some more bearish momentum in this thing, which can take you to this level here. What is that? 44, basically 45. And this thing's so it has some room to go a little lower before it may find stability. So there's nothing there at the moment, all right, as far as a new swing trade, but certainly worth keeping an eye on. Thanks for asking about Mara. All right, let me see what else I got here. Just going through. Before institutions got heavily involved in BC, is it even worth to compare? Okay, good question, go forth. That whole 2017 thing, I agree with you 100%. 2017, Bitcoin was pure retail traders, okay? After that, institutions got involved and the behavior changed. I agree with all that. Now, as far as Elliott Wave goes for Bitcoin, the newer wave counts are going to be relevant to the current crowd. So, those wave counts that we have prior to 2017, yeah, we can keep them as a point of reference. But the way I use Elliott Wave, I won't even refer back that far. I will keep those counts in mind and look at the broad count in relation to those counts. I'll keep that all intact. But more recent activity, right, I'm going to weight it differently. So my thing with Elliott Wave is if the wave count isn't clear, then I ignore it. Okay, if it's clear and it fits like the impulse rules and it's super clear, then I will keep it in mind. That's it, right? Because Elliott Wave can be very subjective and very confusing, and it can throw you off because it'll give you an opinion. You don't want to get mixed up with it like that. So look at it that way, right? So for example, if we can count. I'm always looking either for 5-wave impulses or 3-wave corrective moves. We can count, right, this situation right here, right, 1, 2, 3, 4, and then 5. Those are 5 waves that satisfy the impulse rules. Since then, we should have a corrective structure, and we do. Look, 1, 2, 3, that's an A. Then we have this situation here, which is still part of the corrective structure. Okay, that's as far as I can go with it, right? And that really has nothing to do with the wave count related to 2017. Does that make sense? That's the only way I'm going to use it, right? I'm not going to tie in the broader count into this situation. I'm only looking for things that make sense in the recent time that we're looking at this thing. So that's how I get around that whole retail versus institutional behavior. Okay, now people that are looking at weekly charts, or I watched a guy make a comparison, and he was saying, based on the Bitcoin seasonality, by December, blah, 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 Bitcoin's going to be at 95,000. He said there was a 70% chance of that. And the point of reference, he was referring back to periods before 2017 to make that argument. And I said, this guy is a moron, because he's comparing a time when institutions were not involved. That's really where that separation is very important. I'm not going to say who it is, but that's where that really, but his argument sounds plausible. And people are like, oh, you're so smart. Oh, what a genius you are. Oh, you're so cool. Blah, blah, blah. Right. Meanwhile, he's just basically telling a good story. Sure, it sounds good, but it's not relevant. Right. So when you have people who don't have experience aren't going to know that. Meanwhile, he's telling you that there's a 70% chance that Bitcoin is going to be at 85 or 95,000. And what do you think? Oh, 70%, that's a pretty good chance. I'm going to buy some Bitcoin because there's a good chance. Meanwhile, there's no way you can put that number, 70%, on that argument. Does that make sense? So that goes back to Elliott Wave. Anyway, all right, so I hope that answers your question. I'm here for the Seinfeld impressions. Oh, good, because I know some people don't like those. I got called immature for my Seinfeld impressions. But I like doing Seinfeld impressions. Probably one of the only ones I can do. All right, Bart, what if BTC today candle closes a pin bar? Right, so I explained that, right? That would be, if today's candle closes a pin bar, that's a buy signal. But it's got to take out the high of the pin bar. That's the other part of it, right? The pin bar alone is not enough. It's got to take out the high of the pin bar. But it doesn't look like that's happening at the moment. All right, for investment, it's good to allocate on the first of every month. So we have month candle close. Okay, no, don't. It doesn't matter what day of the month. That's you choose whatever day is convenient for you. When it comes to inventory or position trades, you just decide, okay, on the 15th of every month, that's when it's convenient for me. That's when I'm going to make my purchase. Because again, it's more about your sizing than it is about the timing. So you can refer to your chart to see, are we at a high or are we at a low? Okay, so like typically, if you look back on Bitcoin, because I've looked at like some cycle analysis, and typically on the 15th of the month, Bitcoin tends to have bearish activity, right? There's no, you can't like, that's not a permanent thing, but just for example, so you know that on the 15th of the month, you should be looking at lower prices, right? So maybe you want to wait till the 15th of the month for that reason. But those cycles change. They don't stay like that. But anyway, that would be an example. The point is, you want to know, are you at a high or are you at a low? Because that can help you skew the size of the investment that you make, right? If you want to skew a little larger or you want to skew a little smaller. If Bitcoin is pushing all-time highs, you should not be taking a larger position, because then you get caught in this. And that's what I've been warning people about. People are like, should I buy Bitcoin at 65K because it's going to keep going? And I say, well, if you want to take a small bite, but there's no reason to buy the whole thing, because now you're caught in this. And if better prices are in the future, why not wait for the better prices? So, and here we are, better prices. So now you would skew larger. And if Bitcoin may be at 40K in 2 weeks, I don't know. And that again, the following month, okay, whatever, December 1st, December 15th, whatever, maybe Bitcoin's at 45K. Perhaps you want to skew slightly larger than you normally would, okay? Anyway, so I hope that answers your question. All right, let me just go back to the chat. Okay, I'm willing to take classes from you. I hope you're working on something for that. Oh, if you have, okay, band. Okay, yeah, I'm going to get to band now. Hold on, I'm just going, I skipped a few chat things here. All right, investing means buy and wait until when? Oh, okay, that's a good question. I mean, when you're investing, you're thinking long-term, you're thinking years, okay? So that's going to, when to get out is going to be just as important as when to get in. So to make that judgment, if you've accumulated, right, because this is going to be partly, this is going to relate partly to what your amount that you're investing is in. Let me explain this. So let's just say $5,000 was your target investment, right? You have $5,000, you want to invest it into Bitcoin. So you're going to split that up, right? 10 $500 batches, and over a 10-month period, you're going to start putting those $500 batches to work at any price. But if price is low, maybe you're going to buy 600. Maybe you're going to buy 1,000 on that particular batch. Now, let's say you've accumulated half of your position. You've allocated $2,500 of Bitcoin. You still have another $2,500 that you have not put into the market yet, sitting on the side, right? But you've bought $2,500 worth. And your average price happens to be 50K, okay? And Bitcoin, you know, some news, Elon Musk is going to buy all the Bitcoin that he can, blah, blah, blah. And Bitcoin goes to 70K, okay? And you've just been buying your little batches, and now you have, you know, $2,500 or maybe $3,000 worth, and Bitcoin is now at 70K. Your average price is 52K, let's say. Why not sell some? Because you're at all-time highs. That's when you start to, so just as you allocate in, you allocate out. Right? Because now you have some at much lower prices. Why not take a little off the table? All right, take some profits off the table, and now you have that little extra money, so that maybe the next month, you know, it's lower. Perhaps you can buy it back. I mean, that's one thing to consider, right? You're managing inventory. You buy wholesale, you sell retail. So when you get retail prices like ridiculous new highs, like we've seen recently, you get rid of some. Why not? Okay, because you want to capitalize on the herd while they're there, even if you're not fully allocated. Now, some people may not agree with me on that, but I don't think it's a bad idea. You're just taking some more money out of the market, and you're going to put that money back in anyway at some point, perhaps at a better price. Okay, so or you know, you're putting that money on the side as your profits, and you still have your $2,500 allocation that's still left on the sideline. You keep it separate, and you're just taking some profits off the table. Right? Does that make sense? So I hope that answers your question. It's when you're dealing with inventory, it really helps you have to be very flexible like that. And you cannot think in terms of, am I selling the top? Am I buying the bottom? Because there is no top and bottom. Okay? When you're doing it like that. So, okay, Bart. So band, let me go over band. Okay, I gotta wrap this up here momentarily. Hold on, let me just check the time. Yeah. Okay, I know I have to cut it short a little earlier today, but let me answer a couple more questions. All right, let me get to your questions here. Hold on. All right, so Bart, band. Yeah, so I'm going to do band. I'm willing to take classes from Bart. I appreciate that, Bart. I'll have more to say about that soon. Okay, thank you for asking. So let's go over band real quick. All right, hold on here. B-A-N-D. Okay, and thanks for asking again. So now look, this chart, when I see charts like this, the first thing I want to do is look at the weekly chart. Okay, I want to see that bigger picture. And this is another suspect coin because, again, look at this, right? Bitcoin just came off of its all-time highs. Ethereum, all-time highs. This thing couldn't even break that previous resistance. Relative weakness. I don't like it. Not only that, but look at this broad pattern. I see a shoulder, I see a head, and I see a shoulder. Now, I don't put lots of weight into those chart patterns like that, but the thing is, I certainly don't want to see that kind of bearish formation and think about buying it. So I wouldn't touch this. All right? I hope you're not in it, but if you are, it's behaving in a similar way to Bitcoin right now, right? You have that same double bottom situation. This candle is still fully red. So if it turns into a buy signal, you have a possibility. The thing is, you're probably going to see a similar buy signal across the board, right? Ethereum, Bitcoin, a bunch of junk coins. Don't take them all. Take, maybe I want to swing trade in one or two or something like that, but it's all the same trade. So there's no need to put on more and more risk. You might as well just buy Bitcoin then, right? It's all the same when they're following each other like that. But the relative weakness here is concerning. If Bitcoin breaks those supports, this thing is likely to break this low here, which is what, 673. Don't want to get caught in that. All right, especially with this double top situation. This one looks like it's going to be one of the first ones to really get hammered just on this formation, right? I don't like that at all. So I'd rather pick a coin that's healthier looking. We looked at a few here, I mean, even Cardano looks a little bit better than this. I'll tell you, I was looking at this one, right? This ridiculous coin. Look at this. Look at this. That's a good looking coin. It's too bad we're not in this one, right? I mean, this thing's ridiculous. This thing's up, what, another 7% today? Someone's got to be hyping this thing somewhere. I'm not mentioning this because, you should buy it and be a millionaire tomorrow. But this is certainly a good one for the radar to see how it pulls back, okay? But that's a good looking chart, okay? As you can see, band doesn't look like this. So this is one that's acting relatively strong. Thing is on highs. Those are, I think, all-time highs, right? Look at that. So, of course, you don't want to be buying this now, but definitely keep this on the radar. I know it's like NFT, blah, 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 blah. Just keep it on the radar. Nice momentum trade right there. It's at 137 right now, okay? I'm surprised no one's asked about this. So while we have the chart up, where would be a good place to even consider this? Right now, that would be this level here, which is 78. It's got a long way to pull back, right? It will probably find support sooner than that. So it's going to be a tricky game to play. But if you want a strong-looking coin, that's a strong-looking coin, right? This would be a good one to consider for swing trades if it can give you the support and the setup. All right, so thank you for asking. All right, let me see. Let me just go through this chat here. Okay. I'm glad you find my answers useful, Bart. Adrian, hey, good to see you. Okay, gold. Haven't heard from that one in a while. Has anyone remembered what I said about gold on my previous streams? Because I like to talk about gold, right? What did I say about gold? I said gold is vulnerable. It's tricky because why? The dollar is making new highs, right? And I said they both can't move in the same direction for long. But people, I've been in gold for 30 years. I follow experts from gold. This guy's been following gold for 50 years. He knows what he's talking about. Right. What did I tell people the other day? If you have paper gold, sell it. Sell some paper gold. So here's the thing. The dollar is pushing highs. If rising rates come, gold isn't going anywhere. Gold's not going to 5,000, like they all like to say when gold has a breakout. So my thing with gold is this. It's pulled back into a support. I'm interested in a possible swing trade long. It's at an old resistance, right? This 1820, 1830 area is an old resistance, which is likely to act as a new support. Now, it hasn't begun, the support has not kicked in yet, number one, and that's a nasty candle. That's a lot of bearish momentum right there. So certainly wouldn't want to step in front of that. Again, I'm talking about CFD. I'm not talking about physical. Physical, you can't really play this game with physical gold. Now, so as far as paper gold goes, it's in an attractive location, but if the dollar continues, maybe the dollar pulls back a bit before its next leg higher, you'll see a pop up in gold possibly, but that's all you're getting out of this, right? If the dollar continues that trend, gold is likely to test the range low. So I wouldn't be too excited about gold. Right? And I warned about that. I warned about it because I said gold is going to be vulnerable. Gold is a highly manipulated market. And obviously you can see, like, where did this bullish move come from? Okay, that came out of nowhere, and now it's getting hammered because the dollar is relentless, and they both can't move in the same direction. And which is the bigger market? The dollar, right? So I would hold off on this thing until it could find some sort of stability. I would like to see a failed low, a double bottom. One single candle is not going to be enough for me on this one, especially because of that dollar situation, right? The dollar is what kept me ignoring gold, because I don't want to see a strong dollar and gold doing what it was doing, because I know this is probably going to fake out. So I would hold off on gold. And if you do get that reversal, keep a close eye on the dollar, because this thing is most likely to make a lower high, not a higher high, if the dollar persists. And if, like they said, the FOMC is going to start changing their tune and blah, 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 right? If that's true, and the dollar trend is going to persist, I don't know where gold thinks it's going. So don't get caught up in that whole gold argument with all these opinions. Gold, right? All these gold experts. Best way to play gold, if you want to get involved with gold anyway, are the miners, right? Wheat and precious metals. Are they getting hammered? Yeah, they're getting hammered. NEM, getting hammered? They're not as dramatic as gold. You see that? So if you want to get involved in gold, probably better off buying shares in mining stocks. They're a lot, I think while they generally follow gold, they'll probably be slightly more stable, okay, for the next leg higher. Just keep in mind, gold is not likely to make that new high if the dollar persists. That's all I could say about that. All right, so thanks for asking about gold. All right, let me just jump through here. All right, I got to wrap this up here just in a couple more minutes. I know I keep saying that, but I really have to wrap this up. Let me just run through. Let me see if I can answer any more questions real quick. All right, hold on. So where's that gold question? Okay, hold on. Gold. Okay, Solana. All right, hold on. Based in Maitino. Okay, I'm not sure where that is. Peter, are you right about IOTA? Today was announced that IOTA brings NFT. Oh, great. NFTs. You know, when I see NFTs, forget it. Party is over. These phonies with their NFTs, you know. I mean, let's buy some worthless graphics for $5,000. Yeah, I would, if that's the only reason why IOTA is whatever, then yeah, I would not be excited about that. Okay, James. Okay. Can you take a look at Real M? Okay, hold on. I'm just running through these questions real quick. From Sedona. Oh, nice. Thomas, thanks for joining. Andre, what would be the stop loss for Bitcoin? Okay, well, all right, I can answer that real quick. The stop loss for Bitcoin, I don't know where you're in from, but this thing should not go lower. What is this here? 55,640. I mean, you could put the stop loss around maybe 54.5. Something like that gives it a little room for that failed low. I mean, theoretically, you shouldn't give it too much room here because this thing should hold, right? And that tail isn't forming yet. So don't get caught in this thing, right? You may get stopped out and you may have to get back in. But I'd say to give it a little room, 54.5, something like that, because really it has no business going there. Okay, if 55 is going to hold. But like I said, you may get tapped out if there's a dramatic move, and it might reverse like right after that. So that's frustrating, but you know, you're gonna have to deal with that. Andre, thank you. Okay, no problem. Always help me keep the feet. Okay, although I find myself hope mode. No good. No hope mode. Hope is not a strategy. Have rules. Next session, if you could talk about, okay, for years strategy, that'd be much. Okay, Thomas. All right. Yeah. All right. So I'm gonna wrap this up. It's an SQQQ gambling moment. No. No. I would stay away from that SQQQ nonsense. No, I wouldn't. If you're going to play the SQQQ gambling thing, you had to do it at the high. That's it, and we're beyond that now, right? I mean, let's look like you're talking about that now. After this candle closes like this, what are we at? 16,384. Oh man, this thing got hammered. But well, this like with the SQQQ, it's like basically you have to be in before this move. There's still some room to play with here because it's got so much room to pull back. But this market has been so ridiculous and so relentless that it really is a gamble. So I don't know. I mean, it's going to depend on how aggressive you are on something like this. But if you take that SQQQ on this outside bar, I mean, the outside bar could be the beginning of a broader pullback. Okay, but the problem with the SQQQ is you need this thing to have a really dramatic move. And the chances of that are low. We don't see, even if you took like the SQQQ here, okay, and you hold it to here, it's not even worth that much, okay? And that's a good, 600 point move or something like that. So I wouldn't play that game. I've tried it a couple of times and it didn't work out very well. Okay, so, maybe you could do better than me on that. Anyway, I got to wrap this up. Okay, hold on. Yeah, I got to wrap this up. So, look, I apologize if I missed your question. I see I missed a few questions here. So I apologize for that. But, so I want to leave you with this. Again, just be patient with these things. Don't get sucked into this news. Don't be involved in hope mode. Have your levels determined in advance. And if the market gets there, then you have a reason to even watch. And then the market needs to prove itself, right? And again, this all goes back to having rules. If you don't have rules and you're just kind of feeling things out, or you depend on me to tell you then that's not going to work out very well when things get out of hand and you're not sure what to do, right? Risk first. So, focus on that risk. And if you're not sure or you're in doubt or you're uncomfortable, then don't take a trade, especially right now. Look at these markets. I mean, the NASDAQ is coming off of an all-time high, which it was at earlier today. These markets are ridiculous. They're at ridiculous levels. These are not places to be really thinking long as far as investing or even swing trades. For day trades, okay, you're taking small bites and you're out for the day. Then you're not exposed to this. If this thing pulls back 1,000 points, you're not caught in that, right? Same with Bitcoin and the rest of those. So that's why if you're not sure, just pull up a weekly chart and be like, am I at a high or am I at a low, right? The weekly charts are all coming off of highs. So wait, just be patient with these things. Anyway, all right. So, okay, if you are in the profit again in Bitcoin, doesn't look good. Right. So again, we have to wait till that candle closes on Bitcoin. It's hard to make judgments right now. It looks ugly at the moment. I mean, look at this thing. It looks ugly. Candle's still open though. So does the question that you have to watch for, I'll leave you with this and I'm going to wrap this thing up. Does this candle close like this and the next candle take out the low? You don't want to see that. The next candle needs to be green and it needs to be like an inside bar or like a pin bar or something like that. If it's a pin bar, it's possible that it takes out the low of this red candle and then turns into a pin bar. So you have to babysit that, right? That's why it's not worth stepping in front of this. I'd rather wait till all that confirmation takes place and then buy it at a less advantageous price, because trying to get the best price is very expensive. Okay, it's very costly over time. People don't realize that. So you're better off getting a worse price, but having the market environment in your favor and not getting stopped out 2 or 3 times. All right, so that's what I'd be watching for here. If this closes like this and the next candle takes out the low and the next candle closes red, then stay out of this thing's way. Okay, because then you're looking at possibly 52, 51K, something like that, possibly over the next few days. All right, so I'm going to leave you with that. On Thursday, I will not be streaming because it's a holiday here. I will not be streaming on Thursday. Okay, so don't be coming on here on Thursday, or don't put it on your schedule. I will be streaming next Monday. All right, so no Thursday, back on Monday. All right, everyone. So thank you all for joining me. Enjoy your holiday. For those of you that celebrating a holiday here in this country, thank you again for spending time with me. It's always a pleasure to help you, and I always like to see that people are getting something out of my streams. So enjoy the rest of your day, the rest of your evening, and your holiday, wherever you are in the world. And thank you so much for watching.